Hello. Yeah, let's look at this example on how we go about in preparing a cash payment schedule. And we've been given the schedule for us to prepare. But then we've been given, first of all, we've been given the forecast for the next 7 months from January through July. And these are the sales forecast. But we've been told the monthly material purchases are at 35% of the forecast for next month. And this is very key. The monthly purchases are at 35% of forecast sales for the next month. Of the total material cost, 45% are paid in the month of purchase and 55% in the following month. So they pay 45% in the month the materials are bought, and they pay the remaining 55% in the following month. Labor cost will run at 44,000 per month, and fixed overhead will run at 4,000 per month. Interest payments on the debt will be 3,400 both in March and June. And finally, the sales force will receive a 2.5% commission on total sale for the first 6 months. Again, remember, these are 7 months, but they're only receiving commission for on sale of the first 6 months of the year, and this is paid in June 30th. So, given this information, how do we go about in preparing a cash payment schedule? And this is what I've done. So I've just tried to build this in Excel because again, it's going to be very easy for you to work with Excel, especially with questions involving, payment schedule and so on and so on. So this is what I have. Again, I just copied everything from what you have in already given worksheet and just copied the sales numbers, uh, the the purchases and on, and just brought everything together in Excel because I want to show you how this plays out. So we are going to stick with this. So let's see what happens. So I've already keyed in the sales numbers which was given. That's the sales forecast were given to us. And then for the purchases, this is what we're told. For the purchases, the monthly material purchases are set at 35% of the forecast for next month. So it's 35% the sales forecast for next month. So what we are buying here in January is 35% of February. What we are buying here in February is 35% of our next month sales number. So simply put again, what was bought in December here was 35% of what was the sales forecast for January. So what we are saying here is this. The sales forecast here is basically 35% times the sales forecast for next month. This is simply what we're referring to here. So if you look at 35% of 14,000 is what is going to be bought in December. In January here, again, we're just taking 35% of 16,000. Again, I could go ahead and just say do 35% of 16,000 and have my purchases for 5,600. Again, I could go on and on and on. Now, the beauty of working in Excel is once I have built that formula, what I will just do, I'll just copy this formula across and I save myself time. Then I have all, but now, of course, here I don't have the numbers for August. That's why I don't have nothing here. Again, we're only looking for the first 6 months, so we don't even need July, right? But our purchases for the first 6 months is going to be these numbers you're seeing here. Now, for the payment to material purchases, now see what happens in terms of payment. So, in terms of payment, of the total material cost for the month, 45% are paid in the month of purchase and 55% in the following month. So 45% in the month of purchase, 55% in in the following month. So what are we saying? What we are saying here is, again, I'm just going to add another item here just to show you. So I'm going to add a line here, even though you don't have this in your document, but I'm just going to show you what is happening here. So what we are saying here is the payment to purchases. So the payment to purchase is that 45% are paid in the month of purchase. So in the month of purchase, this was a purchase in December. So what is paid is 45 in the month of purchase, 55 is paid in the following month. So the payment, this 4,900 payment, 45% will be paid in the same month, and the remaining 15 will be paid in the next month. So out of this 49, for sure we know that in terms of payment is 45%. This is just December. I'm just going to put this together for you to see it. Is that it's 45% is paid in the same month, right? In the same month. And the remaining 55 is paid in the following month. So the remaining 55 will be paid here. Are we together? And of course, for January purchases, 45% will be paid in the next in the same month. The remaining 15 will go to the following month. So I'm going just to leave this to be the receipts or the payments for the next month. So the next month here is our payment is the 55% of what we had from the previous month, which was sorry, which was the 49, because we received 45% in the month of purchase, and 55 goes in the following month. For this purchase of 5,600, again we are getting that 45% of that will be received in the same month. Sorry. So that would be, hold on, that should be, I should key in, multiply this with the 56 to be paid the same month, and the remaining will be paid, the remaining 55 will be paid in the next month. So the remaining of that of 5,600 goes to next month. Again, I do the same thing for February, the same thing for March, and on and on. Again, since I already have built the formula, what I'll do, I'll just go ahead and copy my formula across. And I do the same thing here. The 55% just goes across there. Now remember, this representing the 55%. And this, what I have here, is representing the 45% in the current month, and 55% what is to be received in the following month. So in terms of payment, we are talking about, 2520 plus 2695 is the payment. So for January, it's both the two payments. One is the 45%, the other is 15% from the previous month, and so on and on. So we have two. So again, just keep in mind we have two payments. In your worksheet, you only have to key in one number, which is going to be the sum of the two values, right? Okay. In terms of labor cost, again, this should be labor cost, not labor, but labor cost. Sorry, this should be labor cost. Your labor cost, what we are given is this. We are told the labor cost the labor cost will run 4,400 per month. So labor cost is 4,500 per month. So our labor cost in December and in January, again, this was just 4,500. Again, I don't need for January, but I just need for I don't need for December. Sorry, I need from January moving forward. So the labor cost is 4,500 a month. Again, I just copy, duplicate everything, and every month is 4,500. The monthly overhead, the monthly overhead is given. No, it's 4,400. So it's 4,400, not 4,500. Is the labor cost. So it's 4,400 and not 44. So this should be 4,400, and I should copy that. And we're told the monthly overhead is 4,000 a month. Again, just copy, that's each month. And then the other thing we've been given is the interest expense, but in this case, it is only being paid at two levels. So it's being paid at the interest expense. So the interest expense on the debt will be 3,400 for both March and June. So it's being paid in March and in June. So the interest expense goes for goes for 2 months. So you only get paid in 2 months, in March and in June for 3,400. So March and June. So March and June you pay 3,400, and June you also pay 3,400 in interest expense. The sales commission is given, and we were told the sales commission is 2.5% commission on the total sale for the first 6 months of the year. Just the first 6 months is a 2.5%, but this is paid when? It is paid on June 30th. So the sales commission, again, the sales commission is 2.5% on the first 6 months. Again, remember, it's not the 7 months, it's 6 months. So we need to determine our total sales for January, February, March, April, May, June, right? Remember, our total, if you have to look at the total sales, our total sales is, again, I'm just going to do this here. We go to sum. Give me a second. I'm just going to go here and sum the two. So I can go in and sum my sales for January up to June, because the first 6 months, only up to June, right? And our total sales is 106,000. But then in terms of the commission, you know, so the commission you are basically paying on these sales is uh, is 2.5%. So you take 2.5% of 106,000, which is what? If you take 2.5%, 106,000, right? So this gives you what? 2,650. So you have 2,650 as your commission. So again, this is paid in June. So in June, then you come and say, sorry, in June, what you'll do in June 30th, you'll pay this, but how much? 2650. And that's basically what you need as far as the schedule is concerned. Then, of course, the last part of the question is to determine the total payments. So your total payments will be then you just have to add your monthly labor cost, your monthly overhead, your interest expense, and your sales commission. So your total, your total, your total payments will be again. You take the labor cost, which is 44, and your overhead and your commission, and that will be basically what you need to get for this particular problem. So you're looking at those three as your total payment in this particular obligation. I hope this makes sense. Again, simply, again, what you'll do, you'll just take the 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 you take the labor, the overhead, the interest, and the sales commission, right? Of course, including the material. So it has to be plus the material. So you're picking up the material. So these are the material, and then plus the labor, then the overhead, the interest, and then the commission. So those will be your payments. And for the month of January, you have 13,615. Then again, you do the same thing for the month of February. Again, you add the values together, and you do the same thing for March, April, May, up to June. Again, we remember we are only preparing for the first six months. That's the only thing we are doing here. So if you do the other month, again, I have the formula already built in. So what I'll do again, I'll just go ahead and copy this for the remaining 5 months. And here we go. I have my payments, my cash payment schedule.